All right, let's find out what the sentiment on Wall Street was like today. Bloomberg's Alix joins us with more. Alix, a pleasure as always. So what is everyone looking at? Not just the U.S. housing data, because we saw S&P Case-Shiller. We saw that housing prices declined. I think it was 2.6%, but they're saying that the rate of descent has slowed.
But if you look at the intraday S&P chart, it couldn't have been just that information. We saw a solid rally in the S&P until about 11:30, 12 o'clock. Once European markets closed, the stock sort of eased off of those levels and sort of floated around there for the rest of the day. And then the last hour of trading, as you look at that chart right there, really started to climb higher. And I reached out to a bunch of traders when that was happening. I said, what happened? What's going on? They're saying, I don't really know. It's a head scratcher. A few traders had said that to me. And I think that the takeaway from that, and talking to other experts like Peter Cheer of TF Market Advisors, saying that the markets can rally without a cheerleader. They're so oversold that any not bad news, and so no worse bad news, is going to be helpful.
I love that. Not bad news translates into higher stock prices. Anybody talking about capital flowing from Europe into the United States?
Not today. It was more about short covering and perhaps end of the month book squaring as we're reaching that in midweek. It was more about that kind of conversation. And also levels now. So we closed above some key levels, right below a kind of make it or break it price for the S&P, 1335, 1337. And traders are saying it's really difficult now to trade. It's hard to short here. It's hard to buy long after the rally. So what do you do?
Maybe do nothing. Well, let's find out. Let's find out more. I want to bring into the conversation Dan Wiener. He is the CEO of Advisor Investments, helping to manage more than $2 billion. $2.3 billion, Dan. Well done. What do you make of this idea that maybe you do nothing right now?
Well, I was listening to the conversation. I think it's a little bit of the risk off, right? Risk was on earlier in the year, and May comes along and basically takes away half of what we got. There's been this huge compression in returns across the board. So folks are looking at that and saying, well, I don't know if I'm a buyer or if I'm a seller.
People are scared.
They are scared, but you know, being scared is when you make money, right? You have to be in there to make some money, and it's difficult. But if you look back, those points when people were really scared, think about last August. We were talking about last August. You know, we were worried about the debt ceiling. We were worried about S&P taking down the rating on American debt, on U.S. Treasury debt. And what a terrific time to put a little more money to work as opposed to taking it out. And you're seeing investors are very scared because we're getting continuing reports of how much money is flowing into bonds, into bond funds. You're watching Treasury yields, you know, down at levels that when you tell somebody, you know, you could earn 1.75% for the next 10 years if you buy that Treasury, then they sort of realize what they're buying, which is a huge amount of risk.
So I guess I have two questions, and they might be counterintuitive. But the first one is, are you expecting some kind of sell-off like we saw last year, where we were down 19% from the highs throughout the summer? On the flip side, with all the negative headlines and Greek exit still dominating headlines, Facebook IPO not doing well, shouldn't we be lower by now? And what is that saying?
Well, I'm not a market timer, and I would never advise anyone to market time. So could we have another summer sell-off like we had in 2011 and in 2010? Don't forget, we had two of them. With both times in the summer. Sure, we could, but you know, at least our investment philosophy is we want to buy, for instance, companies that have battleship balance sheets. We're buying big dividend paying. You know, the companies that were very popular last year and went out of favor earlier this year when risk came back on, right? Now, when risk came off, risk is now on. Folks are gravitating right back. Those stocks have regained, you know, half of the disadvantage they had up through the end of April. Could we have it? Yes. Is this a time to buy? Absolutely. If you're a long-term investor, this is a good time to buy, and next month will be a good time to buy as well. You know, you don't want to pick one particular point in time. You want to be an investor.
Dan, I want to pick one particular point in time because
ahead.
I know that you follow what goes on at Vanguard, and one thing caught my attention that you showed me. Vanguard closing their high-yield bond fund.
Yeah, they closed their high-yield bond fund just last month, last week. Very interesting, because the last time they closed this fund, they almost called the top in flows into the fund. They typically close these funds when there's a lot of money flowing in, they think it's hot money, or they think it's just too much and people are getting too excited. They had a $1.4 billion inflow several years ago over the course of 5 months. They closed the fund. From that day on, there were outflows, and $1.4 billion net outflow in 5 months. It was almost like they had picked the perfect
So is that
day.
like a bullish sign for stocks for you?
I think it's a bullish sign for stocks anytime you shut things down because people are too interested in bonds, for one thing. But they've shut the Vanguard High Yield Fund again. Within a month or two, very possibly we're going to see outflows, and they'll have to reopen it by the end of the year.
I want to thank you very much, Dan Wiener, joining us, CEO, Advisor Investments, $2.3 billion under management. Thanks also to Alix Steele. We'll check on trading tomorrow with you at the New York Stock Exchange.